JB here. Hope everyone's doing outstanding. Thursday, July 23rd, 9/12. Really quick rant talk about the markets. Some names I'm looking at go from there. S&P futures in the red. SPY was kind of slightly higher in the overnight hours, was actually in the green in the afternoon, evening session up to pretty much the Asia market open, and then as Europe equities open, futures start to just pull just a little bit, some weakness, and then since about 6:30, it's been down and to the right ever since. The SPY was at 746. We're down here at 739. And now you look at some of the futures where we're going to open here today. But sorry, I don't have all the stuff here. Nasdaq's down 1.5%. S&P's down 1%. Small caps down 1%. Those are all futures. So the VIX is up 15%. The 10 years 4.7. So yeah, just we'll see what happens here today. I love gap down reversal days, right? And my favorite days are Fridays. Maybe we get it today. I don't know. It's just like trying to get the feel, the sense, and not that gut or intuition is something that you should make 100% convict. That should be the rationale behind your trades. Just gut or conviction. I'm struggling. Like, what would be the catalyst or the reversal here today? Is this some shakeout before the move? I don't know. But anyway, I was waiting for yesterday afternoon to Google ServiceNow, Tesla, IBM, but more so the first two names. Google monster report, right? I mean, all those metrics they throw out, you might as well just say bananas or widgets or whatever, as opposed to saying billions, because it's just they throw out billions like it's nothing, right? Uh, their AI Gemini up 40% quarter over quarter growth, so that's still huge. Because if you're looking just on a closer dated basis, just on the quarter to quarter metric, that's important considering AI is front and center. Then you look at their cloud growth, 80 something percent, just monsters, and that's high margins areas. They talked about a huge backlog, right? I remember Oracle's big earnings where the stock soared to $330. It was because their RPOs, right, their remaining performance obligations. Well, Google has a $500 billion backlog, and a lot of those are big ticket mega companies. So it's not like those companies are going to disappear. So just great stuff, right? And then the big issue, and I think some reason you're seeing the selling here today is the spending, right? So people like to markets like frugal, right? When you look at a name like Google, Google was throwing off free cash like it was nobody's business, right? They had so much cash they didn't know what to do with it, and now they're going out. And it looks like even yesterday announced another 100 billion in offering dilution, and this is on the heels of some other debt raises. And now we have yields rising, and then you have other companies racing to raise capital to make sure they don't fall behind in this AI arms race. So it's a little bit on edge, I think. Some reason you're seeing a selling here today. And then Tesla, they announced a $5 billion capex, and it's 5 billion, not 200 billion. And Google raised their capex spend. I think it was 175, 185 somewhere. They upped it to 200 billion. So a $15 billion raise. And then the CFO announced or just talked about that they're going to continue to expect the capex to increase significantly in 2027 and will provide more details at a later date. So you have to assume that number is going to continue to go up. So anybody who's thought maybe this is the end of the capex story, it's they're joking themselves, right? So the thing is, they're closest to what's going on. The folks at Google, all these others, so they know that, hey, if they don't spend, there's going to be issues down the line. The folks on the other end, the investor or the folks concerned about the spending, it's like, what is the ROI, right? That's the big question. What is the return on investment? When you're spending $200 billion, what are you going to, what's the bang for the buck? The EPS and all that fun stuff. So we'll find out. I mean, if you take a look at the metrics themselves, great metrics, but is that enough to offset that? Right now, we'll see. I would love to see a reversal here today. I don't know if we get a bounce later today. Maybe to me, hopefully there's just opportunities, hopefully to the upside. But all right, so that was Google, and then ServiceNow. Great quarter. If you didn't know there was this AI apocalypse going on, you would think, hey, ServiceNow, another great quarter. But they didn't do enough to like refute the AI narrative, right? And even that, they break down their AI Pro Plus metric. They didn't. And then I didn't watch. I guess the CEO of ServiceNow was on Mad Money. I'm sure you don't go on Mad Money and I have never seen a CEO go on Mad Money and not sound like a cheerleader. I mean, that's what they're there to do, cheerleader their company, their stock. So I had quotes written down. I didn't get to read them, but with ServiceNow, I was sitting there and you look at the numbers, like, how is this thing not up 15, 20%? And this is not the first quarter. This is not the second quarter. Like, they've had a lot of these different events where you look at the metrics and say this should be trading substantially higher. It's not. So now in the back of my head, I'm like, is this a $100 stock or $90 stock for the foreseeable future, right? That those are some of the things I'm starting to mull about. That maybe this is it for ServiceNow, right? They're fully valued. maybe they're overvalued. That's just the thing in the back of my head. So if I start looking at that mindset, it will prevent me from trying to get lotto calls on ServiceNow based on the earnings, which to me, a couple of years ago or a year, if you told me it was $100 last year even, I would say I'd probably get some spec lottos on the earnings. I mean, just monster results too, and they had growth, right? It's still 20% top line growth. So when you have metrics like that, you say, what AI apocalypse? But all right, so that's sorry, I went on a tangent on those names. So that was after the close yesterday. IBM, nothing to write home about, right? We already knew that. And then that Pegasystems software yesterday morning. Again, another one of those names just kind of shows you there's definitely some stories going on behind the scenes around companies spend, right? So we'll probably get that next week and a week after, where you have some of these other names reporting, where we'll kind of understand what these CFOs are spending money on, where they're directing. Is it in the cloud? And I was talking about yesterday some names to trade in sympathy. Obviously, Broadcom's the one that has their hand in so many different things. So that one was actually holding up. It was near $400 overnight. I thought it would go even higher. It wasn't. That's down to 390. And then you look at some of these cloud names. MDB, which is at 310 just a little while ago, is at 305. That would be a name I look for a bounce possibly today. So MDB, and then Snow's the other one that you kind of like want to look at, see, hey, is the cloud spend at 271? So that's still gapping higher. ESTC, I didn't even see that. That's higher, $60. So that's a good sign. All right. And then the other names of these data center names, the Irons, the Cipher, those are gapping higher. I think Cipher Iron was $44 overnight. But all right, rants for other days. So in regards to the market, we're under 741 on SPY, we're under 50-day moving average. So that's concerning, right? So where do we go here today? I mean, now you start looking at the lower Bollinger Band. That's down there at 732.02. Hopefully we don't have to worry about that here today. We find some support at the open. But the 10-year's got to start dipping, and it's not a good thing. And then the closer we get, 5%, I mean, then these just ugly things are going to happen. And then we're in the backdrop of people raising capital, right? So when yields are higher, it costs money to raise capital. So once the Google's going after money, what about the smaller folks, the people who need the cash, these momentum names that are debt laden and early stages of the growth? It's going to cost money for a momentum name that's still, just IPO'd or what have you to raise capital. They're not a Google. So then it becomes this cash crunch, and they're not able to raise that, or the debt they have, maybe they have to pay it, and then they have to roll out the debt to another year, 2 years out. And now the rates are higher, so it costs more money. Is that baked into these stocks? So there's so many different things. I know rants for a while. Hopefully this all resolves. You'll start to dip. Today's just like in one-off little profit taking, some more repositioning, and we can go from there. All right, so overall markets, and then let's take a look at this 10-year, right? Just not the kind of chart one would want to see in the midst of what's going on. All right, that's overall markets. Just quick on individual names. Thankfully, Supermicro to save the day yesterday, rallying out of the gate, chopped around under 30 for a little bit, and then boom, off to races, 31, 32 by the noon hour, 32.28. I took some profits on the way up. Somehow for like 500%, then 1,000%, and then it was hanging there around 31 and change. The thought process: do I add some more FOMO calls? Do I just hold those 30 strikes? And to me, I thought the odds or the probability of some massive continuation weren't high. Of course, I like the name, and I think it's gonna at some point trade higher. So I figured the best way to trade it, get some spec far out of money strikes for next week, and then lock in the major rest of the profits. Because if it dips under 30, those premiums are going to come out. So I took the last of the calls out for 900%. So I'm good there. Took small percentage of that, rolled it out some crazy spec calls just in case there's some follow through. And you know what the cool thing is? I can always get back in, right? We had some gap down here today. Who knows? Maybe one of their employees gets arrested. There's another indictment or what have you. The stock could be down to 26 again. Then you can't get out, right? So, all right. That's Supermicro. Great trade there. The other thing is this Golden Cross is setting up. Even if it's a red day today, it's kind of like it started. The turn is going to start heading to the curl on the 50-day moving average. It's going to go over that 200-day. Once that happens, typically, and I was talking about this the other day, there's got to be a program where someone can go out and look at the statistical probabilities of what happens to a stock after a Golden Cross happens. Typically, regardless of what the statistics say, that's a trend, right? So if the 50-day is going higher, that means the stock is trending to the upside. So anyway, all right, that's Supermicro, Golden Cross coming soon. And then I talked about the data centers. Even Iron yesterday all the way up to 43 and change, 43.72. I was looking at my calls, which I had sold for some profits. I was getting some FOMO regret, right? But they were 100%, but then it dipped and reverse course, closed in the red. And then overnight again, I'm getting some regret, right? Uh, and then it was 43, almost 44 overnight, and it's dipping. So timing is so important. You could be in the calls and sell for a loss, and it turns in the gain. You can be in you can be you could, if your timing is off, you could lose money on a trade that someone else could make money on, right? So it's all about the timing. All right, so those are names I'm watching. You take a look at a name like Iron. It's not a name I've traded in the past, but if it continues to trade up here in the low 40s, you can make the case that it's starting to bottom or consolidate the last move, and that's the start of a move to the 50 and beyond. So might take a look at some calls here. We'll see if there's any theme that you could pull from Google's earning. Well, I shouldn't say any, but one of them is that this data center thing is not in any way at the ending stage, right? If that's the case, a name like Iron, the Ciphers, the Maras, those are all still going to go. So, all right, that's that. And then Cipher. I mean, look at this chart on Cipher. I was actually looking at like 28 strikes. The 24s are so expensive that I kind of passed. So we'll see where this one is here today. Boom, boom, boom. Sorry, we got 7 minutes to the open. Do I have this up here? Why don't I have this up here? And where's Cypher right now? 23.78. That's actually not that bad. And then other names. So my NKLR, Terra, I took some of the calls out for 100% to cover costs. It's over its 50-day moving average, but can't get through its 200-day moving average, 594. Probably not going to help that the market's lower here today, but they did have news this morning around some kind of permit. But it's just a matter of time before this one catches fire. So as the investment community, let's see here, sorry. And I can't pull this up. Sorry about that. All right. So I'll just continue to hold those strikes. I got to look what that news says. And then the other name. So Reddit, and there was that Wall Street article talking about them possibly pulling out or not renewing their Google licensing deal, right? And supposedly some analysts are saying it's a $60 million revenue stream for them. So if they do pull out, it's a 2% revenue hit. I don't know. I don't think that's going to happen. I don't think it makes sense for either party. Like, how can you have an LLM and not have access to Reddit? So with that being said, you would have to think that deal, instead of being 60 million, is probably 250 million, so on and so forth. So you have Wedbush this morning coming out with a best idea list. So they said that Reddit's back on their best idea list, $250 price target. I don't know if today is the day to get some lottos on it, but I'll be watching if there's some kind of reversal. That's that. And then AVAV, I keep looking at this one for a bounce. Maybe today's the day. Premiums are less expensive as we head into tomorrow. It was up to 157 yesterday and gave it all back. But if it shows signs of reversing, especially if the market starts to show signs of a bounce here, we're at 739 on the SPY. If that's the bottom, we start to bounce. That could be a name I'll be watching. Same with HIMS and HERS. That one, 200-day moving average sitting there right at 31.29. It's hit that 4 days in a row. This peptide story, right? I keep thinking of that in my head. And I'm like, this is the next leg to this one's going to go. Hopefully I'm on board when that happens. Oh, the thing with Reddit, they report earnings July 30th, so a week from today. So it's kind of tough to get calls into next week, but I did this last quarter. It didn't work out. So I'm not sure if I'm going to do it again, right? Fool me once, shame on me. Shame on you. Fool me twice, shame on me. So if I don't know if I'm going to try and get some Reddit calls. I was looking for next week's, maybe the 250s, right? And then obviously it's sitting here at 170. So when you look at the 250 strikes, they're 50 by $1.18. So maybe you can get them for 75 cents, maybe 65 cents. And then you need a rally, right? So you need to get a 185, 190. And then maybe those premiums start to creep up and you get some out to cover cost. That's something I might do as opposed to trying to get some weekly lotto strikes here today. And then the other names, the software space, right? So if ServiceNow is a $100 stock, then you got to look at the Adobes and Intuits and think, hey, maybe there's some downside. I mean, a lot of the meat's been taken off the bone, but that's a possibility. But then on the flip side, I mean, I'll be watching for signs, any hints of bounces today. So if you look at ServiceNow, it was all the way up to 103, dipped down here to 100. Adobe and Intuit are the other names I'll be watching, and they're both melting higher here this morning. So 284 was the lows on Intuit. It's at 290 right now. If it could be one of these gap and goes on these names too. So I'm going to be very close on the trigger on maybe some spec calls, the 240s maybe on Adobe, Intuit, maybe the 310s, just because these folks, it's like the folks who've been betting on the software apocalypse probably no better than anybody else when it's somewhat over, and they're gonna make these stocks go bonkers one of these days on one of these earnings. So I don't know if today's the day, but if there's any signs of it, it almost looks like maybe they're gonna run it at the open. I'm gonna get some spec lottos, full well knowing that if they don't have a follow through, they're bidless. But right now, so Adobe obviously there was some premium because of the earnings, and today's a Thursday. But we have 3 minutes to the open here. But the Adobe 210s, excuse me, 310s. There's no bid on those? Oh, I'm looking at Adobe. I'm talking Intuit. I'm like, well, those are inexpensive. The Intuit 310s are 40 by 75. So you get those 50 cents. Anyway, let's have a great day. I'll be back on audio later. Rock and roll.